If reading is what you're not needing, then this summary with Sunny will really be helpful to you. Before you read this article down below, you can watch this video and it'll give you a quick rundown of what it's about. All right, let's clear up one of the biggest myths in the mortgage world. You do not need W-2s or piles of tax returns to get approved for a home loan. If you're self-employed, a freelancer, business owner, or gig worker, you've probably been told that your deductions or inconsistent income make you too risky for a mortgage. But here's the truth. You can qualify just using your bank statements. And honestly, it's way easier than you think. It's called a bank statement loan, and it's part of what's known as a non-QM or non-qualified mortgage program. Instead of judging you based on your tax-adjusted income, these loans use your actual deposits from the last 12 to 24 months to calculate how much you can afford. So if you've been writing off business expenses to save on taxes, good for you, you don't get punished for it when you apply for a mortgage. Here's how it works, and it's refreshingly simple. You gather 12 or 24 months of your personal or business bank statements. The lender looks at your deposits, averages them out, and uses that number as your monthly income. No W-2s, no tax returns, no explaining your deductions line by line. They'll still check your credit and savings, but documentation is way more flexible, and that's what makes this one of the easiest mortgage approval paths for self-employed borrowers today. Now, most lenders will want a few basics. A credit score around 620 or higher, 12 to 24 months of statements, a down payment between 10 and 20%, and a few months of reserves and savings just to show you're financially stable. If you use business accounts, they'll usually apply what's called an expense factor, basically assuming about half your deposits are expenses. But if you use personal accounts, you get full credit for every dollar deposited. Now let's be real, no loan is perfect. Bank statement loans usually come with slightly higher rates than conventional mortgages, and you might need a bigger down payment. But the upside, you qualify based on your real earning potential. You skip the tax paperwork nightmare, and you finally get access to financing that matches how you actually make money. For entrepreneurs, freelancers, and 1,099 earners, that trade-off is more than worth it. So if you've been turned down by banks just because your income doesn't fit their little boxes, it's time to take a different path. At KEES Lending, we specialize in bank statement loans and other flexible non-QM programs that make homeownership possible for the self-employed. If you're ready to stop letting tax returns hold you back and start owning the home you deserve, reach out today. Let's make your deposits work for you, not against you.